Hello, what's good and what's up, you all? Welcome to the Elevation Lab family. This is your host, Rix the Billionaire. Again, if you are new, please go ahead, hit the subscribe button so that you may always get updated anytime we have new content coming through. On today's session, I'll be speaking on supply and demand, and this is a topic or an area where I said I'll really be so brief on because it's something that I really don't love teaching a lot. I always prefer people dig in on their own for information on the same, but it's a topic that brings so much of value to trading. It adds on confluences when you're trading, and it makes even you be able to create a finer edge for you to be taking entries from. So anytime I'm speaking on demand and supply, basically I'm talking of levels where we want to see for cases of demand, these are like levels where probably buyers come into the market to buy more, and for cases of supply, these are levels where we expect to see like more sellers coming into the market to drive prices much lower. So there are different types of demand and supply, and the ones that I'll be speaking on today, the first one is what we refer to as a drop, a base drop. So anytime I speak of this, let me just show you this type of diagram. Everything is based on market structure. This demand and supply levels are always formed by structure. So anytime we say of a drop, base, drop. A base is more like a pause. Drop, base, drop. This is a type of supply. And this area right here, which is referred to as a base, this is the area where price tends to take a pause before a continuation of the move. So this level tends to act as an important level of supply. So at time you see price push back to that level, then continuation of the move. So this right here, I'll refer it to as a drop, base, drop type of supply. Drop, base, drop. Let me drop. Okay, right there. Drop, base, drop. Then we have another type that I'm going to be looking at, which is referred to as rally. Now this is price rally. Then base, then drop. Yeah. And for this case, this level right here, where we had the base is where we had like a pause. It's referred to as a base, B-A-S-E. At time we'll tend to see price gravitate towards this point, then a continuation of the sell. So this is rally. I'll call this rally, base, drop type of supply. Then on demand, I'll be speaking on this type of demand referred to as drop, base, rally, drop, base, rally, demand. Again, this is the base. So this is the drop, this is the base, and this is the rally. So in most case scenario, we'll always see price tend to gravitate towards this point. Then these people right here tend to defend their prices. Then this is drop. Then finally, I would want to speak on rally, base, rally base drop, rally base rally. Yes. Oopsie. Okay. Now that looks ugly. Let me rally, then base, then rally. Yeah. And right here, it's where we have our base. And this base tends to act as an area of demand. So this is rally. Type of demand. So these are the things that we'll be looking at today, the different types of supply and demand. One, the drop based drop. Then we also have the rally based drop type of supply. Then we have rally based rally, then drop based rally. Again, I won't dwell so much on supply and demand. This is just to give you an insight on how to identify major supply and demand levels. I'll probably do some value. I'll probably share some value too on something we refer to as mitigation, and also probably do more on how to identify which supply zones and demand zones that are likely to hold or high probable. So yes, this is what we'll be looking at today. So without much further ado, let's just dive into the charts. Again, something else to note, it's structure. Structure is very important anytime we are speaking on supply and demand. For us to be on an uptrend, this is the structure where we have higher lows and higher highs, higher lows and probably higher highs getting formed. Then on a downtrend, this is the structure right here. So for me to be able to fully quantify area, or rather an area is a nice supply area, it's always important for me to see a nice structure getting formed. Like for instance, let's say this push that gives us a higher high. Now this helps me quantify whatever demand or supply level, demand level, it's down below. But in scenarios where we have price not going past this area, now it gets hard for me to get to start looking for buys from this level. Why? Because it could be a potential reversal. So sometimes people will refer this to as a break of structure. We can say again, it's a break of structure because this is a structural point. This is the swing point. So a break of structure for a continuation will always help you identify proper areas of demand and supply. And the same thing applies here. We need to see lower lows getting created for us to look for supply and supply levels. So the other thing that I would really want you guys to note is, okay, I don't know if I'm to speak on that at this particular time, but we always say the push from which structure was broken tends to create the highest probable supply and demand levels. I'll repeat that. The push from which structure was broken tends to create the highest probable supply and demand levels, and in most cases scenario price tends to come to those levels. So I'll pick an entire swing point for us to be able to understand how to identify this 1 hour time frame. It's much okay. I'll begin with supply. I'll begin with supply, and for this case, you can maybe look at this. Do you have nice scenarios? I'm looking for area where price wasn't so aggressive. Where we have price coming back a lot without a lot of aggressiveness. I don't know which levels to look at. Let me go to a much higher time frame. Then I'll be able to identify an entire swing, map it out, then you can look at the entire thing. Okay, let's take this scenario here. Okay, let's just take this push from this level. Which level? Let's begin with supply. Yeah, we'll begin with supply. So we'll take this push. Where please give me a swing. Nice. This swing is longer, so I'll take this point there, and this other point we'll get to learn supply from there, then demand on this other push from here all the way up. So let me go to a much lower time frame where we get to have more action and more area to learn from. So beginning from this level, again, we said for us to be able to qualify nice structural breaks, nice supply areas, we need to have like proper areas of structure. So if we look at this area, you can see we have this push. Of course, again, it's always very important to stick to like higher time frames, because lower time frames are so noisy. Sometimes you'll get fake break of structures that don't occur on higher time frame, and that will mess you up. So if you look closely at this point to this point, where we had this push that gave us a higher high, so this right here is the swing point. So if you map out the swing point right there, this simply means anytime, again, this will be applied anywhere, demand and supply. Remember, price is fractal. This simply means whatever happens on higher time frame can always occur on lower time frame. So you can identify supply and demand on lower time frame. You can do that again on higher time frame based on the type of trader you are. So this is the swing point. Again, you can see price pushed to this level right here. Then from here we had this push, then again back to this level before we broke structure. So if we look closely, we have a point here, we have a swing point here, we have an area here that could potentially, we have this, okay, let me mark it out with a week. We have this level right here that could potentially be a swing point. Why? Because price had a pullback, then push, but again, never broke structure. Then we also have an area up here. We also have an area up here where we had a price start. This was a swing right here. This is a swing point. This right here, from this level to this level, this is a swing point. So we'll call this point A, then we'll call this point B. And if we look closely, we had this push, then of course we had this mini structure break, then again price kept on pushing to the downside. So it's from this level we have a lower low. So if you want to identify our supply area, again, let me just again stick to this area here. We had this level here where we have higher low, then price never gave us a higher high. So it will be really hard for us to refer to this closure below here as a structural or rather a break of structure. Why? Because price could still rally to this demand level, of which it happened, then price come back. But again, if we refer to this as a structural break, maybe targeting the demand levels down here to take our labda buy entries from, then this area right here, you can see we have this rally, then we have a pause where price was moving to the sideways, then we had price keep on rallying, and this is where we refer to this as a type of supply where we call it a rally base. This is the base, yeah, so it's more like rally, then base, then drop. Rally, drop, base, drop. Yeah. So for this case scenario, this level here, like we had referred to the diagram, this level here is a level of supply. Again, anytime we're mapping out supply and demand levels, some people tend to use like the previous, let's say the previous 1, 2, 3, 3 candles, or even 4 candles, maybe 3 to the opposite direction, then 1 to the direction of the trend. Some people tend to like refine their entries a little bit too much, and gets dangerous because you might get to miss out on opportunities when you refine too much. For instance, this person, if we had refined this level, could have missed out on this opportunity. But for the person who used this push, this entire area would have had their entry in. Why? Because sometimes it's dangerous to refine too much. Anyway, right there where we had this pros, now this area qualifies to become an area of supply. Leave that alone. Let's come to this other level where we saw price consolidate, then push to that supply level, then pushed to now take out our overall swing point, giving us this level right here. If you guys look closely, it's from this area. Again, it's from this level where we had a push that broke structure. So it's always very important to look at anytime we're taking like we're talking over demand and supply level. We want to see if there's presence of liquidity. Once you have liquidity on a supply level, always go for like the extreme level. Why? Because price will tend to sweep the liquidity first. The other thing that you need to look at is which level broke structure, and for this case we have this area here. Again, if you don't want to refine, you can use this 1, 2, 3, or this entire push 1, 2, 3, 4, 5, but that's a lot of candles. You can use like 1, 2, 3, pick this 3, then map that out as a supply level, and you can see we had this lower low. The price came to this area of supply, then we had the push to the downside, took out this level. This was the most recent lower low to give us a lower low area, which is even much lower. Again, there was a lot of aggressiveness here. We never had any pause apart from this level where we had this pause. So we have this area right here. Again, you'll notice that supply and demand levels during this, on these levels, will tend to have like crazy imbalances on these levels, and price will eventually fill out the imbalances and also tap into the supply areas. Again, it doesn't have to be immediately, but again, price has to eventually. So we have this could have been an area of potential continuation. Maybe see price come back, tap into the level, then keep on going down. Why? Again, this is what do I say? This is why I really don't like teaching on supply and demand, because I'm not so well accustomed to the right words to use. Okay, this swing, there was not much action from this swing. Let's see if we can locate another swing with much more action. But so far, I hope you guys are getting like some value from this. Let's see if we can get a much a swing that has like fine action. Please give me a swing that has some action in it. Okay, this looks better. Let me take this swing from here. Again, I'm doing all this just to have you like understand supply better than I'll do for a buy. for you to identify, to understand demand much better. So I'll still stick on this time frame because it looks nice to me. So we have this area where we had higher low, higher high, higher low, higher high. Then price pushed, broke structure. Then we had this area. You can see we had this area where price was consolidating. This was more like, this was a consolidation, yeah, or price compressing. So on this level, you can see there was this candle that was a bullish doji. This was a bullish doji, yeah. Why? Because we had indecision. So this point right here, we had a pause, then price pushed to break structure. So now this is more like a drop. Then we have a pause, which is referred to as a base, then a drop type of supply, and it's on this level right here. We have our area of supply. You can see price pushed back to that level, tapped into the supply area, then pushed all the way down to give us a lower low. So now we have a lower low. What else do you want to look at? Again, it's always very important for you to look at structure, because it's very, very, very hard for price to break structure if we are going on a certain direction. What do I mean? For instance, you can see we had these mini structures. Remember we spoke on, we talked on structure and substructures. If you look clearly, this swing point from this level to this level, we have like mini structures. You see price forming structures. These are what I'm referring to as mini structures. Why? Because this right here was the most recent swing point. This was our lowest low, so this is the lower low. So we needed to see price go past that level to get us a new lower low. So if we look closely right here, we have this point here. We have this push where price pushed to give us a much lower low. So at time, if you look clearly again, you can see price was pushing to the downside, then coming back to retest these levels. Then price pushing, then coming back to retest these levels. And this is what we refer to as mitigation. We get to learn about mitigation. Mitigation is basically retest. That's like a complicated name for retest. Then again, price pushing back down. Let me show you, guys. Let me show you. We had this push, then price dropped, giving us maybe bearish engulfing, something that looked like a structure, this mini structure break here. Then price pushing all the way down, creating this lower low, or from this level, giving us this. Remember, I'm on hour 4, giving us this level here of supply. Then price tapping into that level, then pushing past this level to give us a lower low, creating this other level of supply right here. Yeah. Then price coming back to that level of supply, then pushing down past this level to give us a lower low, creating this level of supply. Hope you guys are getting. Then from this point, we had this push downwards, giving us again a lower low, creating this level right here of supply. And you can see price came back to that level, mitigated it, and again kept on pushing to the downside. Again, same stuff. Push, this is drop, then you have a pause, then keep on dropping. Then this level where we had our pause again qualifies to be a supply area. Price came to that level, tapped into it, then pushed down. So that's what we refer to as a drop. We've seen a drop. Let's see if we can see both. We have a drop, base, drop. Okay, then the other type of supplies, we have drop, base, drop. Then the other type of supply is rally. What's the other type of supply? Let me refer to the diagrams. Well. Okay, let me just get back here. I'll recall. Okay. Drop, base, drop. Yeah. Oh yes. Then rally. Oh yeah, true. There we go. Rally, base, drop. Nice. I got it. Rally, base, drop type of supply. You get it? Now those are the two types of supplies. Again, yeah, rally, base, drop. Rally, base, drop type of supply. And the other was drop, base, drop supply. So yes, that's it for supply. So that's how you can be able to identify supply levels, like nice supply levels. We have scenarios where we have price creating like two supply levels. Let's say, for instance, we have one on the extreme. Let's say we have I'll definitely find a case scenario in the chart, then I'll show you what I mean by one zone, then the extreme zone. And for that case, it's where we get to look at liquidity. If the base down below has liquidity, then we use the extreme level. If we don't have liquidity, then we stick to the level down below. Okay, let's take another example, which is right here. This is a buy scenario. We want to look at demand on this. I really had nice setups on gold and Aussie dollar, and they're playing out so nicely. I shared them this morning. Okay. Due to time, let's stick to this. There's not much action. Price was not moving nicely here, but again, let's see. We definitely get to see more action when we go to lower time frames on this. So I beg to go to a much lower time frame for us to be able to see this clearly. Excuse my sinuses. Hope you guys are getting some value though. Okay, let's look at this push to the upside. So we have in this scenario where we had this lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, still on our form. Then push to the upside. Nice break of structure. Then right here, this is what I wanted you to look at. So first of all, we have this level right here. We have this level down below. We have this level down below here. We also have this level. Again, this is the structural point according to me. This is how I trade. This is where we had our swing point right there, and then this is where we had our swing low, swing high, swing low. So this was the last structural point. This right here, to me, this was only but a manipulation candle, nothing to call a pullback. So we have this push, a nice break of structure. Then we also have this level right here. We have this level right here. This level right here. Then these are the two levels that I want us to look at. Then we have a level right here. We'll get to look at this maybe if we go to much lower time frame. So this is what I really want to speak about. Yeah, if we look closely from this point, it's from this area where we have the swing that broke structure. But look at what happened to this price. Price pushed below this level of demand. Why? Because of liquidity. Like we said, in scenarios where we get to find liquidity, price tends to go for the extreme levels. Again, if you don't know about liquidity, please refer to the previous videos that I have done on the same. If you look at this area clearly, you can see this was nothing but liquidity. Why? These are weak lows. These are weak lows, weak lows, weak lows. So this was liquidity getting formed here. So you'd realize most people maybe would say this is the push that broke structure, and then maybe have their buys on this area, maybe get activated nicely. They probably have their stop losses down below here. Then who knows where their target was. Then in profit, then again it even gets juicier. You have this break of structure, then now they position themselves even much more with final entries, and boom, we get wicked out. Why? Because there was presence of liquidity this area. So we're always told, anytime we see presence of liquidity, it's a very, very important for us to identify the zones which are below the demand and supply zones, which are way below. In this case scenario, if I was to take this trade, I would definitely use the Fibonacci tool. For me, why? Because I always prefer using the 61.8% level on gold. It doesn't miss, as you can see, it's right there. Again, maybe I'll do a video on fibs, but again, I don't use fibs a lot, only on gold. So you can see price took out this liquidity, which was on this demand level, then pushed to this extreme level right here. And this is more like a demand level where it's not really easy to identify, not unless we go to a much lower time frame. But again, price maybe would have still pushed. Maybe let me just take this out and retain this as the extreme level. So we could potentially see price even push way lower to this extreme level. But if you move to a much lower time frame, then you'll realize this right here was a swing point. Why? Because this is 4 hour, this was only one candle. But if you move to a much lower time frame, like the 1 hour, this is like 4 candles moving to the opposite direction. So this was a swing point. And from this point here, price had to hold this level here. And on this case scenarios, we tend to use the wicks as demand and supply levels. So again, you can see that happened. Price pushed to the extreme zone, then a nice push. After this nice push, we had this pause. Then you can see price tapped into this supply level. Price came to, so this was 4 hour. Price did this, which could be potentially break of structure, then tapped into this supply level, then pushed to the downside, then price kept on going up. Then this right here was a swing point to the upside. We saw price didn't break that. We created more liquidity, or even more reason to go up. 1, 2, 3, 4 rejections, and then price came all the way down. Again, same stuff. This was a potential demand level right there, and this right here again, right there was a potential area of demand, level of demand. But again, you can see price pushed to the extreme. Why? Because right here on this level, did we have liquidity? Yes. I hope I get to see that area. I wish I had my replay tool upgraded, but voila. At times we'll get to see price either to the extreme levels. Let's see if we can get back to that time frame. Okay. at times you'll get to see price move to the extreme levels, especially when we have presence of liquidity. Price tends to push to the extreme levels, or at times price will tend to push to the extreme levels to take out early buyers. So we saw price push to this extreme level, tapped into it, then again a nice push to the upside. Then after price broke this level, at this strong level, I'll call it a strong level. Why? Because it was acting as a point of resistance. We saw this, which looked like a retracement, then a push to the upside, giving us like a nice level of demand right here. Price tapped into it, then pushed all the way up. Again, price creating another demand level down below, where we saw price hold a bit before we broke structure. So basically that's it with demand. Okay, not really. Let me see if I can get to like explain the types of demand, but honestly I don't like teach more on demand and supply, because something that I learned on my own, something that I really understand it better, and I prefer keeping it to myself, not because I'm selfish, but because I don't know how to project it out nicely for people to understand it like I have understood it. It's a really complicated topic on supply and demand. Again, it's not really a must for you to learn how to identify it, but it's an additional thing to your trading. It adds confluences to your trading. Let's see if we can find another scenario where we have can even look at this area. We had this structural points, higher high, price ranging, then push to take out these structural areas. We had this pause, price came back to this level, then pushed up. I bet I'll do another video on, but again, I really don't want to like go deeper into supply and demand. I just wanted to give you guys an overview of what supply and demand is and how you can be able to identify these zones. So I probably get to like quickly go over what mitigation is, and also how to identify zones that are most likely to hold them due to time, because I have to rush somewhere. Yeah, due to time, I'll have to end this video right here. So yeah, I'll probably do that, how to identify like areas that are going to hold. Also what mitigation is. Again, mitigation is literally just retest. So yeah, mitigation, and I think that will be all for supply and demand. Then we can get to learn about volume profile, then we go to risk management, then talk a lot on psychology, which is where trading, it's where the real work is. So that's it for today, guys. Thank you so much for staying through. If you found value, don't forget to share this to help someone else grow as well. Thank you. Bye bye.